What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Decoded. Today is Wednesday, March 20th, 2024, and this is how we traded SPY today. But before we go there, if you like our videos, please go ahead and give us a like and a subscribe. Don't forget to turn on your notifications. That way you will be notified when we drop new content, which is just about every day and sometimes on the weekend. Also, don't forget to leave us a comment and share with your friends. We would greatly appreciate that. So before we get to the chart, happy FOMC day, folks. It's happy FOMC day. I kind of liken today from a retail trader standpoint, kind of like almost like amateur hour. I hate to say amateur hour, but at the same time, it's like the folks that go to the lake on Memorial Day. Maybe they go once or twice a year, so they go Memorial Day, they go the 4th of July, and they go Labor Day. You know, a lot of times it's like, you know what, I'm taking the boat out, I'm going out to the lake, maybe once a year, twice a year, or whatever. They're like, I'm going to do good things out at the lake. I'm going to crash my lake. I'm going to drink a lot of beer. I'm going to do this, and I'm going to do a whole bunch of stuff, whole bunch of stupid stuff, because I'm taking advantage, because I'm at the lake and it's Memorial Day or the 4th of July or Labor Day. That's kind of how I liken FOMC Day relative to retail traders. Now, today is a day where fortunes are made and fortunes are lost. Days like today they get absolutely crazy. And as you will see later in the video, that is absolutely the case. I have said this before, and I'm going to say it again. I will take CPI day 100% of the time over FOMC day. FOMC day just gets really, really crazy. So we have a couple of different things. We have at number one, we have increased volatility. So increased volatility makes options contract prices crazy, crazy, crazy high expensive. So you have volatility. So you have your increase in implied volatility drives the cost. You also have at 2 o'clock today the report that comes out every FOMC day, 2 o'clock Eastern time. And then you have Jerome Powell on the mic at 2:30 doing a prepared statement and then a question and answer. And anytime he gets on the mic, he can say one thing and he can make the market go absolutely bananas. But anyway, this is how we did it today. I'm looking at that pre-market high, 516.28, pre-market low, 514.04. So right out of the gate, I'm thinking, okay, we got $1.24 to work with. Every single line on the chart today. So folks, every single line on the chart is obviously, it's a 30-minute zone. Some are closer together, some are a little bit further away. But these are 30-minute zones. These are the zones that we're going to use at least for the first part of the day. So let's see how she kind of shook out. So that first play out of the gate, we got this rejection off this 515.81. Actually, we got a close up there. And then a move back to the downside. Did not take this death cross to the downside. Only because I'm thinking, you know what, it's FOMC day. I don't know if I really expect a whole lot to happen in the first few hours, at least until the reports come out. But again, today, I'll take CPI day 100 times over one FOMC day. But since we're here, let's see what we can do. Let's see if we can take some trades along the way. Nothing to the downside. Didn't take this to the upside. I was looking to breach. I had this level in here, and I was on the mic, and I said, folks, and what were we? We were almost an hour into the trading day at this point. Got my cursor on it right here. I said, if we get a breach above 515.81, we had super, super thin volume up here, folks. Super, super thin volume, heavy volume area in here that had been developing over the last few days. So lots of volume in this area. And I said, folks, if we get this close above this area, 515.81, I said, potentially we could go up to the pre-market high. And guess what we did? I got in mid-candle on this because I didn't want to miss this move. It was not FOMO. I knew exactly where I was going to stop out if the trade went against me. And that was going to be this lower line, so this 515.76 back to the downside. Fortunately, was able to catch this and take it up to pre-market high. Now, it ran through pre-market high. So at this point, I'm thinking, you know what? Maybe we can take out some other levels up above, which are not important right now because we didn't get there. So I closed out the trade right in here. And it was a nice game. This was a really, really nice play to the upside. It looks like a nice play, but in reality, it was about 40 cents, 45 cents, which, you know, 40, 45 cent play, that's a decent play, folks. That's a good base hit every single day in the market. So I'm thinking, you know what? Let's see if we can do it again. Let's see if we can do it again. So we had this nice play back to the upside. I took this trade right in here. So the breach of the 515.81. Now, what I didn't do was I missed this play to the downside. I was talking about, why I got into this play and closed out the trade in here. But by the time I looked at it, I'm like, oh, we're in the fishtail. Oh, we're in the fishtail again. Oh, we breached this. So went down, took out VWAP back to the downside. And again, that would have been nice to get into. Now, here's the thing about these earlier in the day trades. When we get that initial push, we initially get a push. That first play, when we hit that thin volume, it tends to go relatively quickly. Now, back to the downside, same thing, because you got the buyers, they're pushing it up. The sellers are saying, hey, we're going to take some profits. We're going to push it back down. Now, a funny thing happens, and it's not just today, folks, but it is every other day, every other trading day. So you get that push up, push back to the downside, and then you get the slow moves. Now, I jumped this trade a little bit, not really looking at the 20. I was just looking at the 9, but I said, you know what? I got support on the 9. I got support on the VWAP, and I had a triple bottom, actually a quad bottom in here at 515.64. So remember that, 515.64. That was my get out line. So at that point, it's literally 17 cents away. So it's not much. It looks like a lot because these look like good size candles, but ultimately we're talking about a 17-cent stop, folks. That is absolutely nothing. But it was predefined. Again, the close before the or below the 515.64 took these calls to the upside and ran it back up to that pre-market high. At this point, I said, you know what? I don't know if we're going to be able to get a push through this level and push up to where 516.41-ish up in here. So I took it out when we showed a little bit of weakness back to the downside. So that was it. Now back to the downside, I said, you know what? We breached this, had a hard time getting back over this level. I took this play back to the downside again, crossed back to the downside. We rejected off this 516.28. Took it back to the downside again. Pretty decent play. Now, I missed my exit on this play, folks. I was talking about this trade, and I was talking to a few different members. And I was looking at this 60 level down here. I think that's what it was, 515.60, this double bottom on this 1 minute. It was a double bottom on the 5 minute also, folks. I should have marketed out, but again, I missed my exit here. It happens. Missed the exit, closed out when we breached above the VWAP. Because at that point you're thinking, you know what, you could possibly go long because you got a fishtail play back to the upside on the 1 minute. But anyway, missed the exit on that play. So at this point, we're getting kind of close. So we're at 12 o'clock. So we're 2 hours away. And I said to the folks, I said, I'm taking an early lunch today, only because just relax for a little bit before the fireworks that are bound to happen at 2 o'clock. So again, 2 hours away from FOMC, nothing in here for me. I don't remember when I got back from lunch, probably right around 1 o'clock. So nothing in here for me because, obviously I'm still eating lunch at this time. So I missed these plays back to the upside, missed them back to the downside, didn't take it because again, here's 1 o'clock in here. I was back, could have taken it. But one thing we did not have at this area, we did not have a super, super strong level. What I was looking for 516.21. So up at 516.21, it's not on the chart. It should be, but it's not. So 516.21. That was another double top on the 30 minute. So I should have had this on here, but again, 516.21. And I said to the group, I said, folks, if we get up to that 516.21 and reject off that level, I will take it short. So consequently, I didn't trust this back to the downside because we didn't get up to that double top. Yeah, we got this closed down here. And again, I missed a really, really nice play to the downside. But again, it happens. We miss them all the time. I missed that big one yesterday. Now, in the big scheme of things, this is so 516 down to, you got a 60-cent play down there, which again, it's a nice play. Don't get me wrong. But, we're kind of set up, we kind of like those bigger plays. Nevertheless, the play was there. I missed it only because I was looking at a little bit higher level to reject. I kind of thought we'd get down off here and then come back up. But again, I missed it, didn't take it. Now, here is where the fun begins, folks. Obviously, the closer we get to 2 o'clock, the more you want to sit on your hands and say, you know what, we got reports coming out here in just a few minutes. You probably saw that candle over there on the right-hand side, see exactly what it did. So at 2 o'clock, we get the report that came out, and it essentially said what we were thinking. We're not going to raise hikes. We're not going to lower hikes or rates. we're just going to keep them like they are right now. We still have, some worries about inflation. Inflation is not where we want it to be, and this is the Fed speaking. So we're just going to kind of leave everything alone. So what happened? Boom. Well, you can see exactly what happened, folks. I mean, it ran and it ran and it ran and it ran super, super hard. At this point, I'm looking for pivot points high. Now, I did these pivot points before anything happened. Now, would it have been a safe play to get this play up here? Yeah, it would have been a safe play. But again, it's FOMC day. Again, amateur hour for retail traders. It's the guy that takes out that boat once, twice, 3 times a year, drinks a lot of beer, and bad things potentially happen. So I didn't take this back to the upside. Would have been just a killer trade. I mean, massive trade to the upside. Did not take that to the upside. Didn't take anything back down. Had a nice play back to the downside. Bounced off the VWAP in here. Could have taken it in there. I took this play off of this level of support, so we got across to the upside. First green candle. I took a mid candle play in here, folks, only because I'm thinking, you know what? We keep on pushing up. Seem to have found support. Again, double bottom on that. Got above this level. Again, pivot point level. 517.43, took it back up for a really, really nice play to the upside. I don't know, $1.70, $1.60, something like that. Anyway, took myself out of the trade right there. And at that point, I said, you know what? It's been a good day. I'm not really interested in trading any more of the madness that comes our way the rest of the day for a couple of reasons. Number one, you don't know what's going to happen. You never know what's going to happen. But again, on FOMC day, all bets are off. They can dump it out of nowhere, take profits. Massive volume can pour in. And folks, anything can happen. Now, another thing that happens is you have something that's called implied volatility. So when volatility is high, prices of contracts are necessarily high. Throughout the day, getting closer to expiration or closer to the end of the day, the volatility naturally goes down. So you can find yourself in a perfectly good trade where the underlying is working in your favor, but volatility is going down. So volatility is actually outpacing anything you're doing from an underlying standpoint. So the later in the day, particularly on FOMC days, particularly when volatility or implied volatility is going down, stay out of the markets. And again, missed this nice one back to the upside. Could have taken this off support, but I said, you know what? I don't want to get whipsawed. I'm not interested in being whipsawed. It's been a good day at this point. Total movement today, if we look at total movement today, folks, from the bottom to the top, I mean, it's actually pretty good. So we're looking at, what do we got? 515.08 all the way up to, what do we got? We got about $6 worth of movement, which is a really good move, a really good day. There's no way to predict these things, folks. It's just algos. The algos kick in at 2 o'clock in the afternoon, and the algos do what the algos will do. These are risky days to trade, folks, and it's so easy to get trapped in a trade either way. So while it is critical to always follow your trading plan on non-big news event days like today, or on non-news event days, it is so critically important that you follow your plan on news event days. And on big days like this, folks, it's not a bad idea just to stay out. Unless you're willing to lose the entire value of your play, stay out, because you can get candles that they don't come out of nowhere, but you can get candles and just totally wipe you out of a position. I do know some people that took puts up in here and they said, you know what, we got to come down. They took puts and then it ran right back up and, just kind of got hurt on these plays. But very, very difficult day to trade, particularly late. Not a whole lot going on early and tough to trade late. So again, I'd take CPI day over FOMC day. The good news is we have CPI every single month. We have FOMC, I believe it's 8 times a year. So we get 8 times a year. We get one of these days. And again, this is one of these days that sit on your hands, folks. Not a bad thing to do. So that's how we did it today, folks. That's how she played out today in the market. Now, if you like our videos, please consider giving us a like and a subscribe. Don't forget to turn on your notifications. That way you will know when we drop new content, which is just about every day and sometimes on the weekend. Now, also, please consider giving us a comment. We would greatly appreciate that. Share with your friends. Always appreciate it as well. If you are interested in live daily trading, so every single day from bell to bell, head on over to our live trading Discord. It's called Trading Decoded. We're going to give you that first week for free. No strings attached. If it's for you, hey, stick around. If it's not for you, that is not a problem. But anyway, bell to bell every single day. We talk about these trade setups as they're happening, folks, every single day. Now, if you are interested in the 920 trading strategy, head on over to 920trading.com. Everything you need to know about the specific strategy, about the 920 strategy, is in black and white over there. Go check it out. You don't need to spend thousands of dollars on some trading course that may or may not work for you and your personality as a trader. But yeah, go check it out. Also, don't forget to sign up for our free weekly newsletter that comes out every Saturday. So go check it out, folks. So that's how she played out today, folks. It was a good day for some. So some people had a good day, some people not so much. Fortunes were made and fortunes were lost, but that's how we did it today. That's how she played out today. I hope everybody had a great day today. We're going to do it again tomorrow, folks. We're going to trade tomorrow, and we're also going to do an update video at the end of the day tomorrow. So again, I hope everybody had a great day, and we will see you in the markets.